We saw quite the squeeze on Friday, up 2.38% on the day just for the S&P 500. And as you can see here, previously in the week, there was a head and shoulders pattern on the 15-minute chart that was emerging. However, if you remember in previous videos, we've talked about just because you see a bearish pattern does not always mean that it's going to go to the downside. And you always have to be very careful once you go to the shoulder level, which I'll mark for you right here. If you were to retest, let's say hypothetically, which is what happened in this case, if you were to retest the shoulder level roughly around like 384.75 to 385, and you get over that, then that means that the entirety of the structure is neglected, and you typically will see shorts have to rush out of their positions because it's going to continue to the upside. And that's exactly what happened right here. You can see we had a big uptrend after Apple opened up very strong after earnings. We had the big up candle for the first 15 minutes. We crossed back above this key ascending wedge over here that you can see. You can see the pivots I attached it to the bottom, the yearly low over here, and then also this gap down pivot, which if you drag it across, we fell back into it during earnings. We retested the bottom of the ascending wedge during the earnings after hours, because if you remember, originally Apple did sell off with Amazon, and then it bounced, and then we opened up, closed back above this, and then it continued a lot higher. Once we retested the 384.75 level roughly, we crossed over it with the following 15-minute candle, retested it later on, and then continued a lot higher. So that's basically how this squeeze happened in a sense. But the important part of this video that I want to talk about today is the dark pools, because we saw a lot of dark pool prints all of last week, and it's very rare to see this sheer amount, which I'll go over to the application here to check. It's very rare to see this sheer amount. We haven't been seeing as much in terms of premium in the past couple months so far. So last week is very, very pivotal, because we saw here just based on Friday alone. Remember, these are signature prints. These are from the day prior because they are 24 hours delayed. That's just how it works in the market. So you can see here 4.3 billion worth of premium at this 379.71 level. So what I'm going to do in this video is I'm going to mark each of these levels, and then I'm going to start to paint a picture for you of kind of what we're seeing. So we saw 379.71 roughly. So that's like right around here or so on the market. So right near the low of this move, funny enough, that we saw it on there. And then if we go back to the 27th, we'll go right here to the 27th, scroll down, you see 2.5 billion, still quite a bit. We've been seeing only like a couple hundred million each day to maybe a little bit over 1 billion each day for the past couple weeks. So 2.5 billion, definitely sizable. This one was at 381.99. So we go back to the chart here, 381.99 we can find and then mark that level, which roughly, this isn't going to be exact because I'm doing it in the video here, but 381.98 on here, 381.99. You can see this level is marked on here. Let's go back another day, because we saw an even bigger print on the 26th. If we scroll down, 5.6 billion. This is the largest from the entire week, and this is very uncommon to see such a large signature print block hit the tape. This is at 384.83. Again, going back on here, 384.83. This happened to be right around where the head and shoulders shoulder was. So you can see here, 384.83 is roughly right around here. So right around where the shoulder was, and I'll get rid of this just so we can be clear of where each point was. But look at that, right around where this resistance of the shoulder was, and where we had to cross eventually later to continue up with the squeeze. So we have three large prints here, and if you look back previously on the day, you can look back to the 25th, for example, right here to check if we saw anything big. This has been like previous weeks. We only saw 478 million. That's nothing. That's not anything large at all. It's literally within the past 3 days, the 26th, 27th, and 28th, that we saw the large amounts of prints. And look right here, we are above, and we closed the weekly, and not only the daily, but also the weekly, above all three of these sizable prints. If you are a bear and you want to see a bearish emphasis in the future, we have to get below all three of these. And yes, that may seem like a wide range, roughly 380 to 385. However, for any downside to occur, especially if you're shorting throughout this rally, if I go to the daily chart here, because you think that we have to basically sell off because it's so overextended right now and it looks overbought and everything, we would have to get below all three of these prints, because as of now, just based on the chart structure, we are above all three of these, and it looks fairly strong above all three of these. As you can see here, I've talked about bear bait in past videos. Right here, this daily candle that we saw on October 26th, and also what we saw on October 27th, this is a bear bait structure. We had a large wick that went up and got rejected, and we closed near the lows with the follow-through day that closed below the previous day's low. So you can see here the follow-through day was Thursday, but then the following day on Friday, it squeezed all of the shorts that got in throughout this entirety of the Wednesday and Thursday segment All of those shorts got squeezed out because we ended up making a new high and closed strong on the week, which I didn't want to hold over the weekend because of that. So this was a very strong daily close for the market. Not only that, I've referenced the COVID pivot, or at least the line that I've been watching from the COVID low, which if I scroll back here on the daily, you can see that this is from the COVID low. You drag this across to the previous yearly low in June. This was June 17th. We made the previous yearly low. And as you can see, scrolling back, we closed not only daily, but also the weekly above this level. And this is going to be a key pivot, especially in the future, because this will be more bullish emphasis as long as we stay above. If it cracks down below, that is more chop, because first, we need to break through all three of these dark pool levels in order to actually see more confirmation, at least confirmation in this sense, of further downside in the future. This is a perfect scenario, an example of how I like to base risk, just using dark pool prints as one of my many variables that I use. Again, I don't only use one variable. I never just use order flow by itself, or never just use dark pool prints by itself. I use these in conjunction with a lot of different variables, along with technical analysis, cyclical research, and everything, to determine where I would like to place my bets, in a sense, for swings or day trades. And at the end of the day, that's going to help you to make sure that your trades are the best possible trades, because it's all about the best possible trades and also the least amount of risk, which is a portion of the best possible trades. So as we go into FOMC this week, which is on Wednesday, very large event, we're going to check and see if this range, roughly $5 range on SPY, is able to hold. Will we continue upward higher, or will it retest and maybe hold throughout this range and then continue up higher after that? Or the third scenario would be just a complete breakdown of under this, which I personally don't expect yet. Eventually in the future, I do see that happening. But as of now, we are pretty strong above these levels. So for the moment, your risk is within this range. Think of it as a demand zone in a sense. Your risk would be within this range of 380 to 385 roughly, because right now we are above. So long emphasis would be, first of all, above the COVID line that I showed you, and then also this range here between 380 and 385 due to the heavy dark pool premium we have been seeing throughout this range. And again, as we know, with dark pools, we don't exactly know if they're buy or sells. Remember, they are shares. This isn't just options with dark pools, it's only shares. We don't know the exact intent of it, but we can use dark pools like I just showed you right here to base our risk off of, knowing that there's a heavy range of dark pool premium within this level, or these levels right here. So again, we can base longs above and shorts would be below if we were to cross this in the future, which, like I said, I believe will happen in the future, just not anytime soon. Remember me referencing this 2855 level earlier in the past week's video. You can see here we did break through this level. Remember I said once we broke through that it would be critical to get back above if you were bearish on the general market, because otherwise this thing would continue down a lot lower, and that is what happened here. We did continue down a lot lower, and volatility in terms of VIX is just showing a lot of weakness right now, especially as long as we stay under this 2855 level because it broke through. So in the future, again, if you are bearish on the market, you're going to want to see us reclaim this 2855 level for further upside to get back up into at least the 33 to 35 range, which we've been rejected in many times. You can see back here like 1, 2, 3, 4, 5, 6, 7 times, even more than that. If you look at like each individual daily candle that got rejected off of it with a wick, but rejected a lot in this 33 to 35 range. So you would want to see a cross of this to go for further upside, because otherwise it's just going to continue to go down a little bit more and find lower supports like around this 24 level. This one's key because of this pivot back here. So you can mark that. 24 is definitely key just by looking at it, and then also this 2250 roughly, just because of over here we've seen some form of support in the past just based off of pivots like this over here around the 22 mid range. So those are some levels to look in the future. As of now, looking bleak for the VIX. It could still have some relief bounces, but it needs to reclaim the 2855 level for a more extended downside in the general markets. Also going over DXY, which I've been talking about in the past, this has shown a lot of continuous downside. However, we did have some form of a bounce recently. Again, it's not out of the picture to see some form of a retest of the previous trend line that we were trading within before. This one started back in August. It was August 11th that made the intermediate low right here, and this acted as a support a few times on the way up. It acted as a support back here, and then we fell back below it, which shows a decisive move downward and weakness. Again, it's still possible to have some form of a retest in the future. However, it's going to be interesting to see if it gets rejected hard off of that, because that could leave a lot more downside for DXY. SPY and can mean this is a top for the time being. And again, with that, that could leave some more of a bid on the S&P 500 just because equities tend to thrive with the weakness in the dollar. Other than that, though, I do appreciate you guys watching this video. Will be a fun week to trade, especially with events like FOMC, and then also the following week we have CPI. So some interesting events coming up. Good luck with your trading. Always make sure you mitigate the most risk as possible as we go through these volatile conditions. And I'll see you guys next video on Wednesday.